Hey, how y'all doing? So in this video, we're going to be talking about power of three. Okay, so what is power of three? Power of three is a popular ICT trading methodology. And what power of three stands for, what the three stands for is accumulation, manipulation, distribution. So what we're going to be doing in this video is, well, basically I'm going to be showing you how to trade using power of three in the simplest terms, how to trade effectively, how to look for the highest probability scenarios, for the best scenarios, how to pinpoint it on a chart, right? So we're going to be going over a few different examples in this video, okay? So what I'm going to do is I'm going to start with Euro USD, and we're going to use replay mode today to talk about this. Now, all these plays, I also want to make clear, just so I'm not, doing all this in hindsight now after it's played out. Every single play that I'm talking about in this video, I called in my free Discord chat. Let me make that very clear. Beforehand, before the move, I've called in my free Discord chat like I always do. Okay. If you're interested in joining that free Discord chat, there's going to be a link to that in the video description. Okay. And then you can go in there, you can find my post, and you'll see exactly what I'm talking about. Called this stuff in that chat on Friday. So we're going to go over those plays now, though, and I'm going to show you what power of three looks like and how you could capitalize on it, right? Because it's a very powerful, like power of three is extremely powerful. Yeah. So let's get into it. So we're going to rewind here. So let's rewind all the way until London session, right? So this is when we were first looking at it. Like on Friday, when I was first pulling up my charts, I got to my PC, and this is what we were looking at. This is around the time that I got to my PC, okay? And so we're gonna start from there, and we're gonna break it down, right? So what did I tell you a second ago? What is power of three? Well, there is accumulation is first. That's first, accumulation. Then we want to see manipulation, and then we want to see distribution. So accumulation it looks like consolidation, okay? It's in the form of consolidation. And it's important that you understand that accumulation, it occurs in Asian session. That's where you want to identify that accumulation. It is in Asian session. All right. So I want you to look at Asian session, right? So you can see right here, look at my cursor. Here's the beginning of Asian session in this area right here. We're coming to the beginning of Asian session right here. And then that lasts until midnight. And then after midnight, we get into London session, right? So I want you to look right before we enter into London session. I want you to look at what we see here. What do you see right here? You see this like back and forth movement right here? Look at this. Look how, you see how it's kind of like choppy back and forth? Like, look at this, up, down, up, down, up, down. See that consolidation right there? It's just that's consolidation. And what did I just tell you? That that accumulation, there it is. In these consolidations, what is occurring? In a consolidation, what is occurring? Accumulation. That's number one of power of three, accumulation. And you identify in Asian session that consolidation. Okay. So right here, we have that. See how we have these, here's the high of that consolidation. Let me just note it for you real quick. There's the high of that consolidation right there. And then we have the low of that consolidation down here. See that? So you see like this little, it's in like this little box right here. See this? That's accumulation that's occurring. Now, that accumulation right there, then we come into London session, and it continues at the very beginning of a London session. But then what do we see happen next? We see a little push up, and it cleans it out, right? It cleans out those highs, and it looks like it's going to push up higher. Look at how it's consistently trending up here. Look how it's just, if you're looking at this real time at the beginning of London session, like this thing looks so strong, right? It's like ripping up. It's making new highs. Look at this thing just consistently building up. And then boom, it pulls the rug. It cleans out the lows. And guess what happens at that same exact moment? Guess what happens? Sell stops get taken. Existing longs that are trailing their positions, they're taken out of the marketplace. They're done with. That liquidity is purged. Okay. And also on the other end of the coin, we take out existing buy stops on this push up right here. Okay. Right here, it takes out those buy stops. So this is very important because you see this push up right here. You see this push down right here. Like, and you ask yourself, like, what's the manipulation, right? Because we have both directions here. It pushes up, it takes buy stops, and it pushes down, it takes sell stops, that's how it works. But how do we know though? Like, how do we know the direction? How do we know, like, because for example, what I mean by this is, how do we know, for example, that this isn't the final manipulation? Like we come into London session and we get a push up that takes these buy stops right here, right? And then how do we know that's not the final manipulation? And then how do we know like this move right here isn't the real move? How do we know like this isn't price showing its hand and wants to move lower? Because you might be thinking in your head like, okay, the manipulation is done with now. It pushed up, it took these highs right here. So how do I know that it still wants to move higher? Because our bias on this, or my bias on this on Friday, was bullish. And here's the important thing, and here's something that many beginners, this is where they go off course. This is where they lose it. You need to have that higher time frame direction here. Okay. Now let me correct myself. Maybe you don't want, because I know individuals who don't like use the daily or weekly or 4 hour who do okay. But let me put it like this. The higher time frame makes it easier. It cleans it up for you. And having that higher time frame story, it makes it much easier to not get lost in the intraday price action. Let me say that again. Really pay attention to what I tell you. That higher time frame story, it makes it easier to not get lost in the intraday price action, okay? Because you understand where the draw is at. That's key. You understand where the draw is at. You understand where the higher time frame draw is at. So you're able to more easily identify the manipulation and what's occurring on the intraday chart, okay? Because here's the deal. Let's go to the daily chart here. And we noticed this at the beginning of the day. All right, it's expanding higher right now, but beforehand it wasn't. Beforehand we didn't have all this. It was down here. And here's what I noticed on Euro USD coming into Friday. I noticed on Wednesday, we came down and we took out daily sell stops. See that? That's a stop run. That has the signatures for a stop run. See how it came down, a wick beneath it, and then it closes up higher and expands higher the very next day. That is extremely bullish. That's extremely bullish signatures. That's a stop run signature. And then this candle closed green. We put in a swing low. And as we understand, as I've talked about in past videos, whenever we put in that swing low like that, that third candle is serving as a draw on liquidity coming into the very next day. And here's the key thing here. Like coming into London session, this was still serving as a draw. So right away, I have that higher time frame draw. It's clear as day. We took out the sell stops. Price moves in the direction of least resistance, right? We already took out these sell stops. We put in a swing low. We have the draw. We're in London session now. So it's clear as day where this thing wants to draw next. We already have that higher time frame story that's playing out. We have the higher time frame direction. So knowing that it's likely going to want to draw to expand, to take previous day's highs, it makes it so much easier to navigate that intraday chart. When you have that higher time frame direction, you don't get lost in the noise of the intraday like so many beginners do because they're solely focused on the lower time frame chart. Okay, so we understand where it's draw. That's our draw on liquidity. Okay, so let's go back to the lower time frame chart. So we've confirmed we have the accumulation, which looks like a consolidation right here. That's your accumulation. That's where orders are being accumulated. We come into London session. The beginning of London session is prime time for the Judas swing. That's the manipulation part of power of three. Accumulation. Next, we got manipulation, which is shown with a Judas swing. So we come up in London and we take out buy stops. Okay. We take out buy stops, existing shorts that are looking for this move lower right here. Because look at this. It was moving lower, had a really strong move. It's consistently moving lower. And then look at this. Coming into London session, what does it do? It takes out those buy stops. Yes, it takes out, now this is key, it takes out Asian session highs, okay? Because this right here, look at my cursor, that's Asian session highs. That's a key liquidity pool. That's session high liquidity. That is a key buy side liquidity pool that you always want to be aware of. But also, we took out this short-term high. We took out this high from New York session. We knocked out those buy stops for shorts that were trailing their positions. They were looking for this low right here to get taken out. Because again, get inside the head of a short seller here. Get inside of the head of a short seller. This thing is looking very weak down here. Look at this thing. If you're looking at the 15-minute chart, it's bearish market structure. And then it has a little rally. It comes up into this imbalance right here. It finds resistance. And look at this. It's consistently moving lower, consistently moving lower. There's a big bucket of shorts that are sitting in this. And where do you think they keep their stops at? They're going to keep their stops above resistance. That's where they're going to keep their stops above an established level of resistance. And guess what? It rallies up. It gets into that consolidation, accumulation. It ramps up. Boom. It takes those stops. It's purged out of the marketplace. existing shorts are knocked out of the play because they're trailing their positions. But also on the other end of the coin, we have existing longs that are piling in this thing. Because guess what? This looks like a change in trend right here. It looks like a change in trend. It's ramping up. Look at this. It just cracked these highs. Now we're putting in consistent higher lows in here. We're moving up. We're looking very strong on the lower time frame chart. And then guess what? It pulls the rug on them as well. And it cleans out these sell stops. So it's manipulating both sides of the market here. It's taking out shorts and it's baiting in longs, and then it takes them out. So it cleans out both sides, okay? Because it wants that liquidity, right? Now, but because we have that higher time frame outlook, because we know where that higher time frame draw is at, where is it? I just told you where it was at. It's that it's previous day's highs. Previous day's highs right here. That's a draw on liquidity right there. We understand that it's going to likely want to move up into that level. Okay, so we're not lost in this manipulation in intraday like so many people are, because we have that higher time frame outlook. We know where the draw is at. So we're able to navigate this. We understand what's occurring here. And we understand now that we're getting this move lower and it's coming down and it's sweeping these sell stops. It's sweeping that consolidation, aka the accumulation that occurred in this area. Now let's look what happens next. So why is it moving lower now? Well, it's still in that manipulation swing. This is still within London kill zone. But I want you to notice something right here. And this is very important as well. And again, we identified this in chat. Look right here. What is that? That is a 20 institutional price level of support. So this is a very, very important. We've already concluded we have the higher time frame draw. We've identified the manipulation, or we've identified the accumulation, okay, which is in Asian session. That's where that occurs. We've identified that we have the manipulation occurring right now, aka the Judas swing. And we have the higher time frame draw. We got a bias coming into the day, a clear bias coming into the day. And now we see this Judas swing. We're fully aware that this is a Judas swing right here because we have that higher time frame premise, right? And it's coming down into an institutional price level. I've talked about this on my channel as well, and I'll actually leave a link to the video I made on institutional price levels in the video description for anybody who's not aware of that, because I don't want to get too deep into that in this video. I have an entire video on that, okay, on institutional price levels. But put simply, major market reversals tend to occur around institutional price levels. You know, don't take my word for it. Just go look into the charts and you'll see it for yourself. It's clear as day. It's clear as day. So we have an institutional price level right here, and the manipulation swing is right smack down into that level. Okay. Now, we have more shorts getting to the play now, because look at this. This thing's moving lower now. It's moving back lower. It's cracking these lows, and then the shorts that got stopped out originally. Oh, guess what? Guess what? What's creeping in? FOMO. FOMO's creeping in. It's looking bearish again. It's selling off. You know, they're freaking ticked off. They got taken out up here. And also, you know, new shorts getting into the play because they see this thing selling off. It's making a new low of day. It's looking weak. And that's the intention. Again, that's the manipulation swing. That's the intention of it. Okay. But because we're knowledgeable what's occurred on the higher time frame. We have that draw, and we understand we're coming down to institutional support in London session. We can anticipate that this is manipulation that's occurring, that's about to pull the rug. That's exactly what happened. Institutional price level of 20, it finds support. Now, what happens next? Boom, we ramp up. This is the true direction. This is distribution. That's the full cycle. Accumulation right here in Asian, manipulation in London, distribution right here also within London as well. So we get a reversal. We get a reversal to the upside. It expanded lower in that manipulation to take out these sell stops. We get caught with a reversal up to the upside as we anticipated, because we have that draw up above. We have the higher time frame direction backing us, so we were able to anticipate that. Okay, and then what happens? We have our fair value gap confirmation. See, we come into New York kill zone. It's still trending up. See that? And then of course news took care of it. So, but that's a really good example of it. Of that first play, like we have the accumulation in Asian, we have the manipulation in London, and then we have the distribution late London and into New York session. Now, those of you that trade New York session, you might be thinking, okay, well, how can I even capitalize on this though, right? You might understand London session, but what about New York session? When you have something like this, there's scenarios where you just won't be able to capitalize on it. But New York session, it'll usually give you an opportunity. Okay, if you still have that higher time frame draw that's intact, if you have that draw on liquidity and it's not taken out on that surge in London session, well, then typically what will happen is in New York session is you'll get a retracement opportunity within that range, within the London range. Okay, as I always say, London sets the trend for the day going forward. Not always, but if you have that draw that's still intact, then that is the case. And then you get a retracement in New York, a turtle soup in New York, down within the London range, because at this point, like it's showing its hand that like the manipulation is done at this point. The manipulation is done. You have the expansion to the upside, and then coming into New York session, and if you, again, it's very important that you still have that draw on liquidity. Then you can see a retracement within that range, discount marketplace, and that's your opportunity in New York to get on board the trend. Does it always play out like that? Absolutely not. But that's why it's important to have a firm understanding of, where your draw on liquidity is. Okay. Because, for example, if you have because there's New York session, it's also prime time for reversals. Okay. What do I mean by that? What I mean by that is basically a fake out. Then what ends up happening here next? So you have all this happen, and then in London session, what happens is we get this big push up higher, but then it takes out your draw on liquidity. It takes out that higher time frame level. And if it does all of that within London session, well, then a lot of times come New York session, it's prime time for that reversal opportunity. It's going to want to seek opposing sell stops because it already took out that higher time frame draw. So it's very important that you also have a firm understanding of the draws on liquidity. You got to have a firm understanding of that if you want to be able to navigate it successfully. Okay. But we're going to go over another example here to kind of clear it up a little bit more. Okay. So no worries there. And that's going to be USDCHF. Okay. Again, we're going to go to replay, but as I said with your USD same exact deal, this was all called inside my free Discord chat before the fact, before it happened. So, I'm not just pulling up these charts now in hindsight and saying, oh, look at how smart I am, right? Like a lot of people do. All this was called beforehand in the #1 free Discord chat on the planet, right? So if you're not in there, I don't know what you're doing. You got to be insane. You got to be crazy. I don't know. You just got to be crazy if you're not in there yet, because there's no Discord like ours. That's not me being cocky. It's just the truth. Okay. And yes, I post all my plays in there. I have educational material, 100% free, but also there's just so many other amazing traders in there as well. Whether you're an ICT, we got ICT traders in there, SMC traders in there, other types of traders, it doesn't matter. We got all kinds of different types of traders in there. But not to get too sidetracked, back into the lesson. So USDCHF, we're going to break this down because this was another really good example on Friday. Well, we had several good examples, but I'm just going to go over these two in this video. Not to it's probably already going to be a little bit of a longer video, but to keep it fairly short, right? So USDCHF, my bias on this on Friday was bearish. Okay, and I'm going to tell you why it was bearish. So right off the gate, I had a few key points of interest noted on USDCHF. So we're coming into London session right here. We're coming into London session, and I had to identify a few key points of interest here. We still have this draw from the other day right here. This is still a draw on liquidity that I had noted the other day. Okay, so I believe, Thursday. Thursday, we had our eyes on this level. It didn't take it out, but as I was saying, it's going to want to in the near future. So keep an eye on that. That's next to get taken. So I was only fully aware that we had that draw on liquidity right there. But this morning to the upside right here, we had a few key points of interest that we need to know. We have this fair value gap in here. That serves as resistance. Fair value gaps, they do serve as resistance when prices came up and it's rebalanced some more of that price action. Okay? So that's something to be aware of. So you see right here, the second we take out this higher time frame liquidity, see this high right here? That's higher time frame liquidity above that level. At that same exact moment, we're also going to be trading up and rebalancing another portion of that 4-hour imbalance. Okay? That's resistance. That's a lot of resistance in there. Oh, all right. So we got that. And another key point of interest that I had noted coming into the day was right here. We had this old low resistance. See this? Right here. So here's the deal. I know a lot of mainly SMC ICT traders don't subscribe to support and resistance. I understand. But here's the deal. And actually ICT has talked about this as well. This is something that he's talked about in regards to support and resistance. I can't remember the video, but whenever you have something like this, whenever you have an old low like this, That's cracked. I mean, think basic support and resistance for a second. Support when broken becomes resistance going forward, right? Well, whenever you have that, but it's inside of an imbalance, a fair value gap like this, it's a very sensitive price point. It's a very powerful price point. And we have that in a premium marketplace within this 4-hour price range. That's key. Like, that is extremely powerful information right there. So we have that. Like, put all this together. Put all this, what I just told you right here, in regards to resistance. We have higher time frame buy side right here where my cursor's moving. It's because we got our highest high in the middle, lower high on the left, lower high on the right. That is a swing high level on the 4-hour chart. That's higher time frame liquidity on the 4-hour. We have an imbalance right here. Once it takes out higher time frame liquidity, we're also rebalancing another portion of this 4-hour imbalance. Okay? And at that same exact moment, we're testing a higher time frame level of resistance, being the old low instead of the imbalance right here. Like, you're talking about stacked on stacked on stacked resistance in this area with a clear drawdown below. Okay. Now, some of you might be looking at this though. Some of you might be looking to the left right here, and you may see this surge up on this candle, and you may see it taking out this higher time frame liquidity right here. You may see it tapping up into this imbalance right here, and you may be thinking to yourself, well, hold up though, Mike. Wouldn't this be like a lot of resistance? So wouldn't we like think it's just going to sell off right here because it already took out higher time frame buy side right here? It's already tapping up into this imbalance. So how do we know? How do we know that it didn't want it to come down right here? Because I was anticipating higher prices first. Again, the manipulation swing. We were anticipating that on Friday because we understand the draw. We understand power of 3, which is what we're teaching, what I'm teaching in this video, right? So I was anticipating a move up higher first and then a move lower on Friday. And some of you, that might confuse you because you see the higher time frame liquidity right here taken. You see the imbalance right here that it's trading up into right here already. So you don't really quite understand that. Well, we need to move to the lower time frame chart, and I'm gonna explain it in detail. Okay. So what did I just explain with Euro USD? When does the accumulation occur? I want you to answer among yourselves. When does the accumulation occur? What time do you look for that? What time do you hunt for that accumulation? When? That happens in Asian session. Okay. So you look at my cursor. This is where we come into Asian session up here. And then we come down, and look right here. See how it's kind of like back and forth in here? See how like there's not a lot of direction to this particular area right here? Look at this. Back and forth, back and forth, back and forth. That's a consolidation. So we understand there's that accumulation of orders in there that's occurring. And what's right here also? It's the low of the consolidation, but another bonus is, guess what? It's Asian session lows. It's the absolute low of Asian session that was traded. So it's a more significant liquidity pool than just some random short-term low. It's the absolute low of that session that's taken out right here. So we have that accumulation that lasts into London session. We come into after midnight, at the beginning of a new day. We come into London. And at this point, guess what? What are we looking out for? We're looking out for the second phase of that cycle of the power of 3. And that is the manipulation that is shown with the Judas swing. So what happens next? Notice how price comes down right here in London session, and it takes Asian session lows. It takes the low of that consolidation. Okay. This right here is manipulation. So there's actually both forms. This was manipulation, and the move up higher here was manipulation. Both were. Okay. Because look at this through the lens of a short seller right here. You're seeing this thing sell off. You're seeing it take the low. You're seeing it make consistent lows right here into London session. And I want you to forget. Well, actually, let me just rewind it so it'll be more real, right? So you can see kind of like this is what it looked like in real time. Look at this. Like, does this look bullish to you? If you're looking at solely a lower time frame chart, a 15-minute chart, well, this is bearish market structure. Look at it. Consistent lower highs are being put in. We're coming into a new day. It's making a new low of day. It's looking so weak. It's selling off. It's making consistent lows. Red candle after red candle, printing lower, 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 lower. Shorts are biting this hook, line, and sinker. Okay, they're extremely bearish because they're just following the trend, right? Existing shorts are trailing their positions. Where do they trail their positions at? They trail their positions above resistance. They put their stops above resistance, and that's what you attack, right? So we have resistance right there. See that? Because that price failed to move higher past this level. See how it spiked up and it failed to move higher past that level? That's the definition of resistance. It's a place where it fails to move higher. So they're going to put their stops. We have a big bucket of buy stops above that level. We have a big bucket of buy stops above this level as well. Okay. And we understand also that we have that draw up above. Okay. We have that draw. We have relative equal highs. That's key as well. I want you to notice this. I forgot to pinpoint this. We have relative equal highs right here. Look at my cursor. Look at where it's moving. See those two candles right there? That's relative equal highs. So I also knew that coming into the day. I knew we had relative highs equal up. We have relative highs up above. We have that imbalance, which is also served as a draw. Okay. And I understand the higher time frame direction, the higher time frame draw. I understand that this is prime time for the manipulation swing. And I understand that at the beginning of London session, that this move lower is taking significant sell side liquidity. It just purged, it just purged Asian session lows liquidity. That's a big liquidity pool. And at the same exact time, it's doing what? It's coming down into yet again, it strikes again. Again, I'm not cherry picking this. Like, go into your charts and look at it. Institutional price levels are fucking magic. They're magic. Would I use it as a standalone thing? No. But when you combine it with, other ICT concepts like the power of three, OTE, whatever you want to use, right? It becomes very powerful. It becomes very precise. And you see this move in London session, right smack down into a 50 institutional price level. You can anticipate higher prices. That's exactly what we were looking for on Friday. Okay. Exactly what we were looking for. We were anticipating that next leg up higher, that next form of manipulation up into this level now, because that's our next draw. We've already taken out Asian session lows. We're already coming down to a 50 institutional price level discount marketplace. We have relative equal highs up above right here. Look at this. Look at this right here. This is what I'm talking about. Relative equal highs are up here. So we know it wants to draw up there, likely, right? So what happens? It finds support off the 50 level. No surprise. Major market reversals tend to occur around those levels. It comes up and boom, look at that. It stabs through it. It stabs through those equal highs, or it takes out those equal highs, and then it stabs up into that higher time frame liquidity right here. Look at this. Go to the 4-hour chart. See how it came up and it took that higher time frame liquidity right there? And look how it completely rebalanced that 4-hour price action, that 4-hour imbalance. That is extremely bearish because now this entire portion of price is efficiently delivered. It's completely rebalanced, and you're taking out higher time frame buy stops, and you are testing that higher time frame resistance right here inside of that imbalance, making it an even more sensitive price point. So this is the importance of having higher time frame direction, guys. This is why it's important, because it gives you that outlook. You're able to more easily navigate the intraday manipulation because you have that higher time frame perspective. You're not lost in this intraday noise, because if you're looking at solely the intraday chart, like, you're seeing all this different crap, right? You're seeing it come down and then you're seeing it ramp up. It come down, it ramps up, and it's like having all this choppiness right there, or it looks like choppiness, but it's really just that manipulation that's occurring. But if you don't have that higher time frame perspective, it's difficult to identify that. But we understand that because we have that higher time frame level, we have that imbalance, we have higher time frame liquidity, we have that draw, we have all this stuff up here. So we're able to easily navigate that environment. Okay. And as I said, we had this drawdown here, which I was anticipating it was going to take out. And then guess what? What's the next step? We've identified the accumulation. That's what's in Asian session. We've identified the manipulation, beginning of London session. Okay. And now what's next? We want to see price show its hand. We want distribution. We want the distribution. That's distribution. That's the real direction. That's price showing its hand. That's the manipulation is done with. And now we can go where we really want to go. We can send this thing where we really want to send it because we've completed the objective. We've taken those buy stops. We rebalanced that price action. That was our draw right there in the short term. That was our draw for the manipulation. And then guess what? Also, when this ramp up, what do? We baited in breakout buyers, because again, if you're looking at this on the lower time frame chart, solely the lower time frame chart, and you're seeing this thing ramp up, you're seeing it take this high. Look at it through the perspective. This is a really good way to look. Look at it through the perspective. Like, think you're a breakout buyer, right? We understand breakout buying. You buy the highs, right? And you look for that momentum to carry on. Lots of traders, they trade like that. They see this ramp up and they're anticipating this thing's going to the moon, right? Look at this thing. It's going crazy. It's going ballistic. Look at all these green candles printing one after another, one after another, one after another. But it's right smack into a trap. It's right smack up into that trap. That higher time frame liquidity is all it wants to take. And then pulls the rug. sells off, displaces lower, and it takes out that support that they're keeping their stops at. So you see how it's operating. You see that manipulation. It's clear as day when you have that higher time frame perspective. And now we have the third stage, distribution, price showing its hand, shift in market structure, fair value gap confirmation created. That is the shift. We have the drawdown below. We have that higher time frame draw that's still intact that we wanted. And then that, in a scenario like that, it sets up for a good retracement opportunity to get on board the trend come New York session. Does it always give the retracement? No. Okay, trading nothing's 100% in trading. Sometimes it'll just sell off. It'll be too weak. But that's prime time, like come New York session, to look for a retracement within your imbalance to get short. Okay, and then pops up, sells off, and that was the case. So I mean, just some beautiful examples. Is it always going to be that clean? Let me make this very clear, because I don't want to sell unrealistic expectations like this happens every single day. It's just clean. That's not the case. Sometimes there just won't be anything. You won't have like that ideal environment. It'll be a lot harder to read on some days. Like this is what I considered an easy read, but it won't always be that clean. And that's fine. You don't need plays every single freaking day like a lot of you want. You have to exercise some patience. But by having a firm understanding of everything that I mentioned in this video and being able to identify when that is occurring, understanding of liquidity, like you can clean up. That's all you really need. I know, like you don't need everything in the ICT library. I've said this so many times before. Like just by having a firm understanding, guys, of literally liquidity. That's it. Liquidity, market structure. You can make a killing. You can get rich. Like you can do it just off that. You don't need to know, everything, right? Liquidity in regards to, the technical side of things, liquidity is king. Liquidity is king. Okay. So hopefully you guys enjoyed this video. Hopefully you got some value out of it. If you did, like and subscribe to the channel, and I will catch you later.